Welcome to the podcast series of Legacy of Giants channel. Get this.
Okay.
Imagine strolling through a dry goods store in the 1840s Alabama, picking out some fabric.
Mm-hmm.
And bam, you're looking at the humble beginnings of what would become a Wall Street titan.
Wow.
We're talking about Lehman Brothers, folks, and their story is wilder than a bull run on Wall Street after a 3-martini lunch.
It really is quite a journey. From cotton to IPOs, they really saw it all. And you're right, it's a story of ambition, risk, and ultimately a fall from grace that sent shockwaves through the global financial system.
Okay, so rewind with me to 1844. Picture this. Henry Lehman, fresh off the boat from Bavaria, just 23 years old, sets up shop in Montgomery, Alabama. Not exactly the Wall Street we picture today, right?
Not quite. But it was a land of opportunity. The South was booming with cotton production, and Henry, along with his brothers Emmanuel and Mayer, saw a chance to make their mark. They started accepting cotton as payment from farmers, essentially becoming middlemen in the cotton trade.
So they're wading through bales of cotton, not exactly rolling in cash just yet. How do they make the leap from this small-town operation to the big leagues of finance?
It was a strategic, calculated move.
Right.
As their cotton business grew, they realized they needed to be closer to the action. So in 1850, they opened a branch in New York City. Remember, this is before the Civil War, and New York was already a major hub for commodity trading.
Ah, so they planted themselves right in the heart of the financial world. Smart move.
Very smart. And they didn't just sit back and watch. They were instrumental in establishing the New York Cotton Exchange in 1870, solidifying their role in this booming market.
So they're shaping the market itself. That takes guts and vision.
It does, but it's important to remember the context. The cotton industry at that time was heavily intertwined with slavery. While the Lehmans were making shrewd business decisions, they were also profiting from a system built on exploitation.
Right. A complicated legacy for sure. So they're cotton kings in New York. When did they start dabbling in the world of stocks and bonds?
That shift began in the late 1800s. They started dealing in railroad bonds, helping finance the expansion of this transformative industry. Think about it. The railroads were like the internet of their time, connecting distant markets and fueling economic growth.
And the Lehmans were right there, funding those iron horses. So they're not just traders anymore, they're becoming financiers, right?
Exactly. They were evolving with the times, recognizing the potential of emerging industries. And they were becoming increasingly involved in underwriting, helping companies raise capital by issuing stocks and bonds.
This is where things start to sound a bit more like the Wall Street we know.
It is. And that shift really accelerated under the leadership of Philip Lehman in the early 1900s. He had a knack for spotting promising businesses and connecting them with investors. In 1906, they partnered with another rising star, Goldman Sachs, to underwrite their first IPO, the International Steam Pump Company.
Wait, Goldman Sachs? So these two financial giants were in cahoots even back then. What kind of companies were they taking public?
All sorts. They helped General Cigar go public, introducing the world to mass-produced cigars. And one that might ring a bell, Sears Roebuck and Company.
Sears?
Yeah.
Talk about a company that changed the way people shopped. Imagine you could order anything from a sewing machine to a house from their catalog. That's Amazon before Amazon.
Exactly. And Lehman Brothers played a part in making that revolution possible by helping Sears access the capital it needed to grow.
So they're shaping American industry, influencing how people live, work, and shop. It's amazing to see how these early deals had such a ripple effect. But I'm guessing the early 20th century wasn't all smooth sailing. What challenges did they face?
Well, imagine navigating a world war, the Roaring '20s, and then bam, the Great Depression. Those were turbulent times for everyone, including Lehman Brothers.
Okay, so how do they survive those storms? Did they always come out on top?
Not always. They had to adapt and innovate. During the Great Depression, when the stock market crashed and many financial institutions were crumbling, they made a strategic shift towards venture capital.
So instead of clinging to a sinking ship, they looked for new opportunities. Interesting. Tell me more about this venture capital move. What did they invest in?
They had their eye on the future backing companies that were pushing boundaries. One of their most significant investments was in Dumont Laboratories, the first commercial television manufacturer in the U.S.
Wait, are you telling me they financed the dawn of the television age? That's incredible. This means the very screen you're watching this on might not exist without Lehman Brothers.
It's quite possible, and they didn't stop there. They saw potential in a struggling Radio Corporation of America, which we know today as RCA. They invested in companies like Halliburton and Kerr-McGee, fueling the growth of the oil industry.
So from cotton fields to television screens, they really had a hand in shaping the modern world. But I can't help but wonder if they were so successful with these early tech investments. How did they handle the dot-com bubble decades later? Did they ride that wave too? That's a story for part 2, I guess.
Yeah, the dot-com bubble, that's a fascinating chapter in Lehman's story. It's a tale of two halves, really. They initially thrived during the boom underwriting IPOs for tech companies left and right. Remember, this was the late 90s, the era of irrational exuberance, as some called it. Valuations were skyrocketing, and everyone wanted a piece of the next Amazon or Google.
So they were riding high on the tech wave, cashing in on the frenzy. But we know how that story ends, right? The bubble bursts and a lot of those high-flying companies come crashing down. How did Lehman handle the fallout?
Well, they definitely took a hit when the bubble burst. Many of the tech companies they'd backed went belly up, and their investments lost value. But unlike some firms that went all in on tech and got wiped out, Lehman had a more diversified portfolio. Remember their venture capital experience during the Depression? That taught them the importance of not putting all their eggs in one basket.
So they learned from the past, spread their bets, and managed to weather the storm. But this brings us closer to the event that ultimately defines Lehman Brothers, in most people's minds, the 2008 financial crisis. What role did they play in this whole subprime mortgage debacle?
Ah, yes. This is where things get really interesting and where Lehman's legacy becomes quite complicated. Under the leadership of Dick Fuld, who took the helm in 1994, Lehman became a major player in the mortgage-backed securities market.
Okay, for those of us who don't have MBAs, break down this mortgage-backed securities thing. What exactly were they doing?
Sure, so essentially they were buying up mortgages from lenders, bundling them together and selling them off to investors as securities. It was a way to spread the risk, and initially it seemed like a very profitable strategy. The housing market was booming, prices were going up, and everyone assumed these mortgages would be repaid.
So it's like a big pot of mortgage soup, with everyone hoping it's a delicious recipe for success.
Yeah.
But we all know that soup went sour, right? What role did Lehman play in that?
They were one of the biggest chefs in the kitchen, so to speak. They packaged and sold billions of dollars worth of these mortgage-backed securities, and here's the crucial part. They also held on to a significant portion of them, essentially betting on the housing market's continued rise.
So they weren't just the middlemen, they were putting their own money on the line. That's a bold move, especially when you're dealing with something as big as the housing market. What happens when the music stops and those bets go bad?
Well, as you know, the music did stop. In the early 2000s, lending standards loosened and more people were getting mortgages that they couldn't really afford. These were the infamous subprime mortgages.
Subprime, the word that sends shivers down the spines of economists and investors alike.
Exactly. And when the housing bubble burst and home prices started to fall, those subprime mortgages began to default at an alarming rate. Suddenly, that pot of mortgage soup wasn't looking so appetizing.
So Lehman's holding all these toxic assets and the value's plummeting. What happens next? Do they try to cut their losses and get out?
They did try, but it was too late. The signs were there in 2007 when they had to shut down their subprime lending unit, Aurora Loan Services, which had been a major source of those risky mortgages.
That sounds like a pretty big red flag. Did they change course at that point?
Woolfold, the CEO, remained stubbornly optimistic, even as Lehman's stock price began to slide. He believed they could ride out the storm, but the storm was only getting bigger.
So they're clinging to the wreckage as the waves crash around them. This is where the tension really builds.
Yeah.
What happens next?
By September 2008, Lehman's situation was dire. They announced massive losses, their stock price was in free fall, and they were desperately trying to find a buyer or secure a bailout. There were even rumors of a potential acquisition by the Korea Development Bank, but those talks ultimately collapsed.
Sounds like a desperate scramble for survival. Were they completely alone in this, or were other institutions facing similar problems?
Oh no, Lehman wasn't the only one in trouble. Bear Stearns, another major investment bank, had already collapsed earlier that year, and the government had stepped in to orchestrate a bailout to prevent wider panic.
So there's this precedent of the government intervening to save the day. Did they do the same for Lehman?
That's the million-dollar question. This time, the government decided not to intervene.
Wow, that must have been a gut-wrenching decision.
Why?
Why did they let Lehman fail?
Well, there were several reasons. Some argued that Lehman had taken on too much risk and hadn't done enough to protect itself. Others worried that another bailout would send the wrong message, encouraging reckless behavior in the future.
So they drew a line in the sand. Lehman had to face the consequences of its actions. What happened next? The suspense is killing me.
On September 15, 2008, Lehman Brothers filed for bankruptcy. It was the largest bankruptcy filing in U.S. history, and it sent shockwaves through the global financial system.
Okay, so the giant falls,
Yeah.
but I'm guessing the story doesn't end there. What happens to Lehman's assets? its employees, its legacy?
That's a great question, and it takes us into the aftermath of this historic event. We'll see how Lehman's pieces were picked up, how the financial landscape changed, and how their ghost still lingers in the halls of Wall Street today.
So Lehman files for bankruptcy, sending shockwaves across the globe. It's like the financial world's tectonic plates shifted and everyone felt the tremors. What happens in the aftermath of such a seismic event?
It was chaotic. Imagine a giant jigsaw puzzle suddenly exploding with pieces scattering everywhere. That's what it was like for Lehman's assets and operations. Some parts were scooped up quickly. Barclays, a British bank, acquired a chunk of their North American operations,
Wow.
including their iconic headquarters building in New York City.
So the Lehman name, at least in part, lived on under a new banner.
Yes. And Nomura Holdings, a Japanese firm, purchased Lehman's operations in Asia and Europe.
Okay.
It was a fire sale, really, with assets being sold off at bargain prices.
So even in its death throes, Lehman's pieces were still valuable to others. But beyond the immediate aftermath, what about the long-term impact? Did Lehman's fall trigger any lasting changes?
Absolutely. Lehman's collapse was a wake-up call exposing the vulnerabilities of the financial system and the interconnectedness of the global economy. Regulators around the world scrambled to implement stricter rules, increase oversight, and try to prevent another meltdown.
So it's like they were trying to patch up the cracks in the system before another earthquake hit. Did these changes actually work? Did they make the financial world safer?
Well, that's a debate that continues to this day. Some argue that the reforms went too far, stifling innovation and economic growth. Others say they didn't go far enough and that the system is still vulnerable to excessive risk-taking.
So it's a balancing act, trying to find that sweet spot between stability and growth. But shifting gears a bit, I can't help but wonder, what if Lehman hadn't gone under? What if they had somehow weathered the storm? How would the financial world look different today?
That's the ultimate what-if scenario. It's impossible to say for sure, but it's fascinating to speculate. If Lehman had survived, it's likely the government would have been forced to intervene in other struggling institutions as well. A domino effect, perhaps.
So potentially even more government intervention in the markets.
Possibly. And the moral hazard issue would have been magnified. If companies believe they'll always be bailed out, they may be more inclined to take excessive risks, knowing they won't face the full consequences.
It's a slippery slope, for sure. But on the other hand, if Lehman's collapse exacerbated the crisis, wouldn't their survival have potentially mitigated it?
That's the counter-argument. Perhaps the panic wouldn't have been as severe and the recession might not have been as deep. But it's all speculation, really.
True. It's like a choose-your-own-adventure story for the financial world. And we'll never know what would have happened if they'd taken a different path.
Exactly. But it underscores the importance of understanding these events, learning from the past, and making informed decisions to shape a more stable and resilient financial future.
And who knows, maybe if Lehman Brothers were still around today, they'd be at the forefront of navigating the new challenges we face, like the rise of fintech, the emergence of cryptocurrencies, and the ever-evolving global landscape.
It's an intriguing thought. They were certainly known for their adaptability and their willingness to embrace new opportunities. Perhaps they would have found a way to thrive in this new world.
Well, we'll leave that hypothetical hanging in the air for our listeners to ponder. It's been quite a ride, hasn't it? From a small dry goods store to a Wall Street behemoth, and ultimately a cautionary tale about the perils of risk and the interconnectedness of our global financial system.
It's a story that continues to fascinate and teach us valuable lessons. Lehman Brothers, despite their downfall, left an undeniable mark on the world.
Thanks for joining us on this deep dive into the rise and fall of Lehman Brothers. Their story is a reminder that even giants can fall, and that the decisions made in the financial world have far-reaching consequences.
It's a story that reminds us to be vigilant, to understand the complexities of the systems we operate within, and to strive for a more stable and equitable financial future.
And to all our listeners out there, if you enjoyed this deep dive into financial history, don't forget to like and subscribe for more captivating stories from the world of Legacy of Giants. Until next time.